But U.S. stock futures falling today after 3 days of gains as investors await more clarity on the tariff front, and that tariff uncertainty prompting Barclays strategists to cut their forecast on the S&P 500 by nearly 11%, citing tariff hits and weakening survey data weighing on the benchmark index. Joining us now for more on this, we've got Yahoo Finance's own Josh Schafer here. So this is just the latest firm to cut their S&P 500 target. What do we know so far?
Yeah, Brad, I mean, a pretty big cut too, right? So some of the other cuts we had looked at was a firm maybe saying S&P 500, 6,500 by the end of the year, down to 6,200. That was sort of where Goldman Sachs cut theirs, right? Yardeni Research cut from a pretty bullish target down to the mid 6,000s too. But then you take a look at Barclays' cut. I would argue this is rather bearish, honestly, because Vinu Krishna, the lead strategist over there, has been pretty bullish over the last 2 years. He now sees S&P 500 reaching 5,900 by the end of the year. That's not a lot of upside from where we are right now, right? And so what he's sort of highlighting within this outlook, he says weaker consumption, slower overall activity, including a hit to U.S. GDP, higher inflation, all of those eventually weigh on earnings per share for the S&P 500. Now, one of the key takeaways from that would be slower growth, higher inflation, a trend we have been talking about a lot recently, right? And that's something that Stifel's Barry Bannister is also talking about. You could basically kind of call that stagflation to some extent, right? Stifel's Barry Bannister has been talking about that. He has an S&P 500 5,500 call. And I think what's emerging among these calls right now this year is there's a dispersion. You still have a lot of people that argue maybe we get close to 7,000 for the S&P 500, maybe we get above 6,500, maybe we rally almost 20%. But then you have people making legitimate arguments on the path of the economy weighing on stocks that basically keeps us flat for the end of the year. And I think for the first time in a while, you can sort of see both of these sides potentially playing out.
Yeah, just this week, we've seen a couple of bullish calls, a couple bearish calls. You had Morgan Stanley's Mike Wilson saying we've got a Mag 7-driven near-term rebound happening. But then, of course, you have HSBC downgrading U.S. equities. It seems like the scale is widening, Josh. And I know you wrote about this over the weekend.
Well, it just fits the market mood right now, right? And then you hate to just keep using that word uncertainty when we're talking about Trump policy, when we're talking about the economy, honestly, when we're talking about the path for stocks, but it fits. And I think at some point, that's just the market environment we're in. And perhaps the key takeaway for investors from that is not a lot of conviction that we're just definitely coming out of this uncertain period with back to the races, right? There's not a lot of conviction from most people we're speaking with right now that what you saw from the stock market in 2023 and 2024 is just going to magically come back at the end of 2025. There might be a path higher, but it depends on what happens with tariffs. Truly, it really does. And how much tariffs, how long tariffs are in for, how much they weigh on the overall economic picture, the growth story, and therefore S&P 500 earnings, right? Yeah. And I think one thing, another common thread from these calls, Maddie, you just referenced what Morgan Stanley's Mike Wilson was saying about the Mag 7. There are several strategists now talking about the Mag 7 potentially being cheaper on a relative basis than the rest of the market, which I think is rather interesting. And again, you're not seeing people say, pile in, we're back to just Mag 7 only, but they're starting to circle that group and say, valuations are their cheapest in 2 years. Do I believe that? Maybe we'll find out a little bit more in a month once we hear from those companies, but it's an area of the market that for the first time in a long time, not everyone is just saying, those are a little expensive. I don't know if we can keep doing that. Yeah. People are the narrative is definitely fully shifted at this point.
And the narrative too, it's so interesting, the amount of takes that we've started to get as well around what this next earnings season, how important and how critical. And we sound like a broken record sometimes that this is a critical earnings season. No, this is actually a fairly pivotal earnings season because you've already had companies come out like they typically do at the beginning of the year and pull back some of those expectations. But if they once again say, we still don't have enough clarity or we don't have enough certainty coming from what is the essential part of strategist thesis right now, 1600 Pennsylvania Avenue, they don't have that clarity, then investors aren't going to get that clarity.
And there's two sides to that earnings story too, right, Brad? There's the tariff side, right? I want to hear what companies that are exposed to tariffs actually think tariffs on certain countries could mean for them, right? Do that math out for me if you can and tell me what that means. But then there's the AI narrative. And that's sort of, in a lot of ways, perhaps maybe even agnostic of tariffs, right? We've been talking about are these companies spending too much on AI? When is it going to boost profits? When's it going to trickle down to these other companies for, it feels like a year now, at least back to last summer, I think is when the market started questioning it. That's separate from tariffs. That's a different uncertain thing that we don't really have an answer to. So there's kind of two big questions that you're curious to hear about over the next month. And quite frankly, as you can tell, I'm a little bit excited to get some of these answers because we've been talking for a while about we want answers, and it feels like maybe we're getting a little bit slowly closer to actually having some.
Yeah, and will those tariffs be a one-time hit to earnings or something a little bit more sinister that might be longer lasting, something we would love to get clarity on those earnings calls for all the executives listening to our programming. Josh, thank you so much. As always, appreciate it.